Welcome to Lending Matters, the Leeds Building Society Mortgage Market Podcast. I'm Louise Drummond, the National Distribution Manager here at Leeds Building Society, and I'll be your host for today's session. We do try to make these sessions pacey and informative, so whether you're walking the dog or driving in the car, hopefully you'll find this really interesting. Today we're going to be talking about shared ownership, and with us we have our resident shared ownership expert, our corporate account manager, Clive Sandom. So welcome, Clive.
Thank you, Louise. Good to be here.
So at a time when purchasing a house is really difficult for first-time buyers, there are different shared ownership schemes, different schemes out there for affordable housing. But specifically for brokers that don't know much about shared ownership, can you talk us through it a little bit?
Yeah, so shared ownership, as its name implies, is where a client will buy part share of a property, the other part being owned by a housing association. Typically, a housing association would be a non-for-profit organisation, and they will charge rent on the part of the property that the customer doesn't own themselves. So, for example, a typical shared ownership apartment or house in this country would cost £245,000, but the client might only buy £100,000 of that. Okay, and then they would pay rent on the difference to the housing association.
Is the rent at a set rate, or can it vary? Does it depend on the housing association?
Yeah, so most shared ownership companies use a model lease, okay? And that model lease has a rent of 2.75%, which can increase annually at the rate of inflation. But the security that the client has when they're buying a shared ownership property, unlike private rent, is that there are restrictions to the growth in that rent. So that's one of the benefits of shared ownership, and that it gives people peace of mind, and that they're able to buy a property that is well maintained in a nice area, and don't have to worry about rents flying up, doubling overnight.
Yeah, and what would you say is the typical profile of somebody that's attracted to using shared ownership? Is it just first-time buyers or home movers, or?
Yeah, it's the majority are first-time buyers, and as I mentioned earlier, there are caps on the income so that people on higher incomes are not eligible for shared ownership. But the average income that we see of people buying shared ownership is around about £40,000 a year. There is a bit of a misconception that you have to be a key worker, but you don't. So anybody who fits the criteria and passes the assessment by the housing association qualifies for shared ownership. Interestingly, around about half the people buy shared ownership properties are single, and I guess that's probably expected, that if the people that live on their own wouldn't be able to afford to buy a house outright on their own, so shared ownership offers an alternative for those type of people. But I think it's become far more popular as house prices have grown over the last 20 years. So whereas once it was probably seen, I wouldn't say it was seen as sort of not so acceptable, but it might have had a few image issues in the past. But now I think it's far more acceptable and seen as like the obvious way of getting on the housing market.
Yeah, and for brokers that maybe haven't dealt with shared ownership before as well, is it quite a difficult application process? Is it something that brokers get involved with, or do clients tend to do that themselves?
Well, I think ordinarily, if somebody wants to buy a shared ownership property, they probably Google or have seen a development in their local area, and they will probably approach a housing association that is selling a development in their area. That housing association will then normally put them in touch with a mortgage broker, but that's not always the case. And I think most people that buy shared ownership have come from the private rental sector. And as we all know, private rental has gone through the roof recently. So more and more people are thinking, I can't afford this private rental. I need to look at an alternative way of living. So those people are probably, again, approaching their mortgage brokers and saying, what's the easiest way that I can get on the housing ladder or find alternative accommodation. This is what I'm paying in rent. What would that get me in terms of a mortgage? And they can do an assessment and work. The beauty of shared ownership is that you can buy a share of the property proportionate to the income that you are receiving. So you haven't got to go for the maximum, which is 75%, and you haven't got to go for the minimum. You go to whatever you can afford. So I think in terms of the broker input, the good way to find shared ownership customers is to, if you're estate agency based anyway, is look at those people who are privately renting at the moment and try and contact them and say, look, there is an alternative to this. Have you thought about shared ownership?
Yeah. And if brokers want to get involved and attract more clients that are looking at shared ownership, what would you say is the best way for them to do that? I know you mentioned about housing associations. Is there any other way they can get into it?
Yeah, I was going to say housing associations. So again, you can find out in your local area the names and addresses of all local housing associations, of which there are a lot in the country. You can contact them and to find out, what they do for their mortgages currently. Or, as I mentioned earlier, if you've got clients that are currently renting and you know that they're paying a higher rent than they would be on a mortgage, you can point out the advantages of shared ownership to them and help your clients in that manner.
Yeah, and it all sounds really positive, but like anything, are there any drawbacks to the scheme? Is there anything that brokers or customers should be aware of?
In the past, there has been an image issue with shared ownership, but as I mentioned earlier, I think that's in the past, and there's a good choice of real good quality properties around for people to buy on a shared ownership basis at the moment. There are costs involved, other than just the mortgage. There's the rental to take into account, and there are maybe other fees that are involved, but that would need to be addressed by contacting a housing association. But by far the biggest issue is that there's just not enough properties around. We all know that there's a housing shortage in the UK. Shared ownership, there is around about 202,000 shared ownership units in this country at the moment, which is about 1.2% of the total housing stock. Clearly not enough. And we're only adding to that stock by new properties that are being built on a shared ownership basis by around about 17 to 18,000 a year. Demand far outstrips supply. So I'm reliably informed by some of my broker contacts that for every shared ownership unit that comes available, they have 10 people after it. So the big issue is that we need to build more shared ownership properties. And I'm afraid I haven't got the answer to how that's going to happen, but that's a clear issue that we need to address.
Yeah, definitely. I think the demand for more housing out there for first-time buyers and people trying to get on the property ladder is more prevalent than ever. With regards to buying out the house, if somebody decides that they want to either buy a bigger share or they want to own the house outright themselves, is that quite easy to do? How does that work?
Yeah, so there's a mechanism called staircasing, and that's the way that people can buy additional shares in their property. So as I mentioned at the start, a typical share might be 40% of the value of the property, but as time goes on, the client might feel they want to own more of it. The benefit of owning more is if the house prices go up, you benefit from an equity growth from that share of the property. Recently, there have been some changes in staircasing. So you used to have to purchase a minimum of 10% shares at a time, but under the new leases, you can actually buy 1% shares. So smaller shares, you would think, makes it easier for people to do that. But clearly, again, we know we're in a cost of living crisis. People don't have a lot of spare cash around. But one thing that we've got at these building societies is that we've launched a shared ownership savings account, which allows people to save to buy additional shares in their property, and it pays a really competitive rate of interest. So that's designed to try and help people to create a larger sum of money so they can actually buy shares of their property. That said, there are a lot of pressures on people to just to pay all the bills at the moment. So we don't see an awful lot of people staircasing out to 100% of their value of their property. But I think it's something that it should be discussed with clients by their financial advisor.
Yeah, definitely. And when it comes to Leeds Building Society, what do we offer that might be different from other lenders? Like criteria, is it good affordability? If you can talk us through that.
Yeah, well, I'm proud to say that Leeds Building Society are market leaders in shared ownership, and we have been for some time. I think because of that, we've got the expertise, we've got very qualified, experienced underwriters head office that understand the market, and because of that, our efficiency in getting mortgage offers out is really good in the shared ownership space. We tend to aim to have the most competitive products. I wouldn't say we're always the best, but we're normally there or thereabouts. And we have some of the best affordability for first-time buyers on the market as well. So if you add all those things together, I think you'll find that Leeds Building Society offers a really good experience for people wanting to buy shared ownership properties.
Yeah, brilliant. And what about in the future? Is there any new schemes that are coming up? Is there going to be any changes for the current shared ownership scheme that's available?
Yeah, I mean, as I say, the biggest issue around shared ownership is not enough properties. But there have been some recent changes in the shared ownership lease, because previous lease was quite restrictive. We mentioned staircasing, and that's been made easier. The term of the lease is now moved up to 990 years from day one, where it used to be 125. So there are certain things that have changed in the shared ownership market to make it more flexible and easier for people to understand, with fewer fees involved. Because of the slowdown in the housing market in the UK as well, what we've noticed over the last 12 months is that some of the major developers in the UK are looking to get involved in shared ownership, which is something that they've shied away from before, because they've always had alternatives such as Help to Buy. Yeah. But because shared ownership now is really the only game in town in terms of government affordable housing schemes, there is something called First Homes, but that's very small scale in comparison. We're seeing developers wanting to get involved, and they're now contacting us and say, how do we get involved in shared ownership? And there have been some notable successes. Some of the biggest builders in the UK have managed to get schemes off the ground. So we're starting to see more shared ownership come to the market. I don't think a lot of people say we need more grant funding. I'm not sure that we do need a lot more grant funding, because the issue is not around having the money to build the houses, it's where to build them. And I think what we're finding is that planning is becoming harder and harder, and you find that a lot of applications go in to build new developments from shared ownership, but they might get rejected because I think that sometimes there can be local objections to big developments, and that's probably the reason.
Sorry to interrupt, Clive. On that point, is it easier for a builder to get planning if they commit to doing a certain amount of units on shared ownership, or does it help them at all, or is it beneficial?
Not currently at the moment. There used to be a requirement for local authorities to meet for affordable homes, but the targets that the government have given to local authorities have been taken away for various reasons. So there isn't that sort of urgency by a local authority to suddenly start building affordable homes. However, politically, as we've mentioned, everybody knows there's a really big need for housing in this country. Yeah. So I think we might see more relaxing of planning moving forward, because that's the big barrier. People have got there is the demand, there is the funding, but the objections are one of the biggest issues, and the planning objections in particular.
I think you've definitely covered a lot and given us a great insight into shared ownership. Is there anything you feel that maybe I've missed, or anything that you want to highlight? Or
well, hopefully not. Hopefully we've covered off all the points. And I have to say, I think it's got a bright future, shared ownership. It has been going a long time, but there are improvements coming along the way. So I'm sure that the market will grow.
Thanks very much for that, Clive. That's been brilliant. And I hope it's been really useful for our listeners today to hear about shared ownership and get a better insight into the market. And thank you for tuning in, and we'll see you again soon.